Hello everyone, welcome back to Current Economy and Investment Insights. Today is September 21st, 2020, and Paul and I have information from Ameriprise Financial. Paul Munichel is from Ameriprise Financial, and we have a recap of last week's activity, and then I will give you this morning's information that we had just received from Ameriprise. So Paul, it's all yours.
Great, thanks Ron. Today we are going to talk about the housing outlook and how it is set to offer some positive news to potentially the turbulent markets and the volatility we're expecting to see this week. So let's begin. There seems to be no lack of potential turmoil for investors to consider this week. Amid an otherwise quiet economic calendar, however, new and existing home sales could offer some stability to investor sentiment. Housing was expected to be a relative bright spot in the economy coming into 2020, but the pandemic has been the rate sector which conditions have been beneficial. Mortgage borrowing costs, which already were very low coming into the year, have moved even lower. The sector also suddenly benefited from what could reasonably be called one of the most disruptive non-economic trends in history, a sudden surge in net outward migration from cities. Mortgage rates have been sliding lower since late 2018, but rates have fallen even further this year. Combined with relatively good finances for most middle income and higher households, and a sudden surge in net outward migration from city centers, the sector has been a clear bright spot in the economy. We believe these trends are likely to continue over the intermediate term, at least particularly given the tight availability of housing supply in the area across the country. So potentially housing might stabilize the markets this week. It looks like we're going to have a volatile week if today's futures are any sign of what's to come. So we'll see.
Okay, and as of this morning, Ameriprise Financial has also given us the latest information to share with you. U.S. equity futures are sharply lower as weaknesses in the technology sector pushed the Nasdaq Composite deeper into correction territory. So we're seeing a little change there.
Yeah, I mean, the Nasdaq has spiked so far, so fast from the lows created in March. A correction is expected. We are coming into a presidential cycle which causes more volatility. There's a lot out there that just seems natural for the market to pull back here, but who knows how far it'll go.
And major benchmarks in Europe are being led lower by bank stocks following allegations that the multiple firms have been dealing with suspicious funds. So that's not going to help the situation over there.
That doesn't help anything, no.
No. And gold fell to its lowest level nearly 2 weeks this morning as of the U.S. dollar strengthens ahead of the Fed Chair Powell's 3-day testimony this week.
Yep.
Do you know what day that's going to be, Paul?
I'm not sure the exact days, but the 3-day policy talk this week, and investors are anxiously
and we can
that.
report on that
next week.
I have some year-to-date status as to where the S&P 500 is a plus 4%, Dow Jones is a minus 1%, and the Nasdaq is a plus 21% as yet.
Yeah, so despite that pullback that we're seeing in the Nasdaq, still posting very positive numbers on the year, which if you've been invested all year in the Nasdaq, I think you'd be pretty happy with a positive 21% rate of return so far.
Yep, it really turned out very, very well. Well, we're going to be switching to your money. Stay with us. Paul has an interesting topic to talk about. Making the most of your tax return refunds, I guess, is what we're going to be focusing on. And stay with us. We will be right back. And we're back with your money. As I had mentioned, Paul has an interesting topic, making the most of your tax refund. Let's hear what you have to say, Paul.
Thanks, Ron. And I understand that it's an unusual time to be talking about tax refunds this year, but due to COVID and the unusual circumstances that came with it, the tax filing deadline was extended until mid-July. So therefore, some people are now just starting to receive their tax refunds, so that's why we're talking about it now. It does feel weird to talk about it at this time, but again, that's 2020 and that's COVID, so everything has been different. But let's go ahead and begin. So let's go ahead. We've got 5 different ways you could take advantage of those tax refunds should you be starting to get them right now. Point number 1, or before we begin, a good option to apply is towards helping you achieve your financial goals with those tax refunds. So let's go over those 5 options. Option number 1, build up your emergency cash reserves. So in these uncertain times, it's more important than ever to have cash available if you should need it. This is especially true if your household income is subject to fluctuation due to job instability created by today's challenging economy. It's generally recommended that you have 3 to 6 months of household income set aside in savings or money market accounts where cash is readily available. Point number 2, consider paying off or paying down your debt. You can use your refund to reduce your debt load, such as credit card borrowing, student loans, or even your home mortgage. This will help reduce interest costs that bring you closer to retiring these debts, which can be a burden to your monthly cash flow. Point number 3, think about boosting your retirement savings. If you could put this money to work for your future, a good place to start is to add to your retirement accounts. If you have not fully funded your IRA for this year, applying your tax refund for that purpose could be beneficial. Every $1,000 in refunds you add to your IRA now will grow to no more than $7,600 in 30 years. That's assuming you got a 7% return per year on average. Point number 4, add to college savings. If you're still trying to build a fund to help with college costs for yourself or your children, your tax refund can provide a boost. Be sure to consider establishing a 529 college savings plan if you haven't thought about it already. It can offer the ability to generate investment earnings on a tax-deferred basis, and all distributions used to fund qualifying education expenses are tax-free. And point number 5, find a business startup. For those with an entrepreneurial bend, a tax refund can provide a seed capital to help underwrite a business startup. Costs or even act as financial cushion as you get started. So in conclusion, if you regularly receive a large tax refund, you may want to adjust the withholding on your paycheck depending on your refund, because it may increase your monthly tax pay, allowing you to allocate extra income each month to your financial goals. This strategy isn't right for everyone, so as always, we urge you consult with your tax advisor and your attorney and your financial advisor before making any adjustments or decisions on taxes or savings, before you move anything with this income check you might be receiving.
Paul, just a side note, you should actually be reviewing your portfolio soon, before the end of the year, so that when you go into the new year, you have a new plan all set up, and you can have your tax advisor give you a projection as to where you stand also, if that's important enough to have to put into the factor of calculation. So, but you're right, you have to talk to a professional person to get all this pulled together, and it's about time for you to have a portfolio review.
Yep, especially with all the expected volatility we think is coming before the end of the year. You want to be comfortable with your portfolio going into that season.
Exactly. Paul, you want to give your idea in case someone would like
Sure.
to share a question or two with you?
Absolutely. Again, Ron mentioned my name is Paul Municle. I am a financial advisor at Ameriprise Financial. And should you have questions or concerns, give me a call directly. I'm at 708-226-3412.
Well, thank you for staying with us. For Paul Municle with Ameriprise Financial, myself, Ron Jankowski with Palos Heights Channel 4, we wish you good investment day.